What is going on, everyone? I hope you all have had a wonderful day, end of the week, Friday. Gonna be breaking down yesterday's price action and today's price action. Try to make this video rather quick, as I did miss yesterday's post just due to me being busy. Didn't quite have enough time to get video done yesterday. So I do appreciate those of you that do stop by and look forward to these videos. I hope you guys keep coming back. If you do not mind, leave a like. Please subscribe if you are new. And let's get this thing underway. So once again, we're going to be looking at our, what are we looking at? 30-minute time frame, per usual. 30-minute time frame, profile, um, bar chart, and then we're going to break down our larger time frames. We're going to look at our monthly, we're going to look at our weekly, and then we're going to look at our daily time frames, break that down, and kind of give you guys the rundown of what to expect over the next few weeks, um, next few days, next few weeks, next few months, and just kind of follow price, right? As Tom Canny, right? Is that what his name is? Says be dumb, follow price. Anyway, so let's go over what occurred yesterday, just real quick. After the emotional move that happened on Wednesday, right, and then the massive move down in M period, yesterday we were looking to open up near or below the price probe, which was right here at L's low. We did just that, but we didn't have a whole lot of move. We ended up actually getting above it and then grinding up towards the 10Y point of control that was right here. As you can, I had it labeled, but because we hit it yesterday, I took it off our charts. And then the same thing with that price probe. But we had that 10Y point of control, and that became an upside target as well as M's high. I even said in the previous day's video that I would be expecting to trade or chop around inside of M's range if we opened up inside of the day without a gap and we didn't take out the low, right? So that's kind of what we did initially is we traded M's range, grinded up in D, couldn't take out M's high, and then began to rotate over. Now, you could have taken positions on these pullbacks. As a matter of fact, I did actually get involved in that on that day. I was taking longs in F period and then taking profits on a quick bounce up. Same thing in G period, taking quick profits on a bounce up. After that, I didn't touch the market, didn't know what was going on, as well as I had to get to the event that I was had. Excuse me. Anyway, then we began to grind down, wiping out long positions. Anybody that was buying up here, they began to get out of the market, right? Because they were thinking, all right, we're going to go up and take out the day's high. We didn't quite get that, right? We began to roll over in H period, getting the day's low, setting a new low in the day. So not only did we take out the initial balance high, we took out the initial balance low. Then we continue that in I, and then we're just one time frame down, one time frame down in I, one time frame down in J. Had a set of single prints, one time frame down in K. Attempted a set of single prints, and once L opened up, L takes out K's low, doesn't get much for it, and then we rotate back up and fill that set of single prints and just kind of chop around. So no real directional move. But one thing to note is we closed right below this area where we probed from the previous day, and I'm gonna highlight it real quick right there. So right there is where we probed to. And we were expecting to see some sellers right there, right? So we probed, make this less ugly. Boom, boom, boom. Okay. So that was where we probed on Wednesday, and then we get below that area on Thursday, and then we don't come back to it. Well, today, after continuing the one-time frame down yesterday, guess what we did? Or starting the one-time frame down yesterday, we did the exact same thing today. We took out the day's low. We got the low of day from the 20th, and didn't get much extension, right? And then we come back into the day's range and then begin to chop around as the market was pretty rotational early on. A, B, C, D. We actually got near the overnight low, didn't take it out. And those are indications that the market is short covering or beginning to exit their shorts. Anybody that was shorting here, obviously, and anybody that's short here, obviously, once we took out the day's low, began to cover their shorts, near the overnight low, as well as anybody in the overnight session that had positions they covered against that low, and then we began to rotate up. We set our initial balance in A and B period. C period takes that out, so we begin to one time frame up. D stops that one time framing, and then you can kind of tell we might be rotational for a little bit. And then we create a somewhat wide point of control in E and F after grinding and setting new highs on the day. And then what happens? We begin this classic choppy, slow grind up to the upside, as all we did was one time frame up, not necessarily a trend in the technical sense where we have single prints, but we did have a short covering trend to the upside as well as momentum buying. Each time one of these time frames pulled back, it was a buy. Each time it was basically, retail traders drew a trend line like this, right? They just threw a trend line, and each time it came back to that trend line, there was a buy. It was almost comical how this thing grinded up. However, it did provide good opportunities to at least take a long position to continue the one-time framing. Each time one of these time frames pulled back, you could have taken a long against that time frame's low, the previous time frame's low. So when we pulled back in G period, you could have taken a long against F's low. When we pulled back in H, you could have taken a long in G against G's low to rotate up. When we pulled back in I, same thing. Pull back in J, same thing. Pull back in K, same thing. Pull back in L, same thing. As a matter of fact, I didn't get involved at all until after H period, seeing that we're continuously one-time framing up and the trend was to buy on the way down. So I actually did take longs in I period to rotate up. And then I actually shorted the first time round against a new high in I period. So I sold to let this thing rotate in because I didn't feel like the momentum was there, as well as the first standard deviation was right around that high. And I had seen earlier in F period and in H period that we bumped our heads against it and then rolled over for a few good points. So once we did that in I period, I shorted, it came in, I got out of the trade. Didn't take a trade in J period. And then in K period, I did take a small trade, but lost on it. And then I actually lost on 2 to 3 longs and pretty much wiped away most of the profit that I made earlier in the day. And then in L period, on the pullback, I attempted a long, started it way too soon and got hurt. So I ended up down. And then seeing once L took out K's low, we couldn't get much extension to the downside. And we didn't technically stop the one-time framing because it was only, what was it? We only stopped it out by a tick. So a tick doesn't stop the one-time framing. And once we began to rotate up, I began to get long 88, 87, 86, a 3-lot. As it pushed up, I got out of my position 92, 93, and 94. I wanted to hold until we got to the overnight high, which was right around 98 in that 4,000 level. I wanted to see how we reacted up there, but however, considering that I had taken losses and I came back on the day just slightly green, I allowed the fear to get to me on that part and got out of the trade for a small profit. However, had I held up until the high of day here at 4,003, I would have had a solid trade. 15 point plus trade to the upside on a 3-lot is a really good trade. But note that we got right to the base of that price probe and closed below it, right? We got near the base of that price probe. So this 4,000 level was becoming a very visual target per usual to short against, as well as this day's low here, which was T plus 2 low, I think. Once we got below that, we got near it, backed off a few times. So that's basically the gist of the day right there. Not a whole lot occurred. We ended up taking out the day's low, so we are still one-time framing down on the daily. We don't have a wide point of control. We don't have an afternoon pullback low. We just have the day's high and the day's low, and we're going to go ahead and mark those destinations. Today's low was 37.50, 37.50. So 37.50 was the day's low. And then after this, we will look at our monthly, weekly, and daily charts. Low of day 3. Oh, today's the 24th. One thing to remember is that this area kind of is the line in the sand, right? You want to see, sellers want to see us stay below the 4,000 level and not get back above this price probe. So keep that area kind of marked or mentally, or mark it on your chart where it's more visual for you guys coming into the next week. We come into the end of the quarter this next week, so we'll see how that shapes up the rest of the week, the market. 4,350 was today's high. We'll mark that, and that's literally all we go out with. Kind of like yesterday, we went out with the day's high and the day's low after the emotional move. Same thing today. Not quite as emotional, but still short covering to the upside. And if you guys are looking for a supportive group of traders, I will leave a link in the description below. Come join Paul's room or join VWAP Trader, their room. Both are great discords. Great opportunity to learn how to trade on a 30-minute time frame and use it to your advantage. You see a lot more when you're zoomed out versus when you are just staring at a 1 minute and 5 minute chart. Granted, those have their own benefits, but when you can trade the ranges of 13, 10, 23, 29 points on a 30-minute chart, you get a lot more risk for, or a lot more reward for the risk that you put in if you know where to enter the trade. So I'll leave a link in the description below for those of you that are interested. All right, let's look at our larger time frames here. Let's get into our monthly. All right, so monthly is in a 4-month balance for me. Now you can say it's in a 5-month balance and use this monthly low here, but for me, I believe we're in a 4-month balance using 42.08.50 as our balance high and 37.88.50 as our balance low. We got near our balance low, near our balance high. We're just kind of chopping in the middle here. So we are in a balance. Now within this balance, I believe we are in a larger extreme balance, and I have that extreme balance of 43.27.50, which was August of last year's high, and then October's low as our extremely monthly balance low here at 35.02. Now I do expect a pretty good move whichever way we decide to come out of this 4-month balance, as we've been consolidating and coiling here. I do think maybe this can continue for a little while longer, unless there is something very significant that comes out micro or macroeconomically speaking, that could change things in a heartbeat. Once again, if we do push back up to the upside, I want to see acceptance over that 41.41 level, as we rejected pretty big above it. So anywhere from 42.08.50 to 41.41, I don't think I want to be long. I don't think I want to be a buyer around that area once we get near that on a monthly level. However, if we get near our monthly balance low, potentially take a long the first time there just to see if anybody on the larger time frames protect it. Now let's look at our weekly. Weekly is in a balance, a 3-week balance. However, you can see how this is trading inside our monthly balance, right? That's what we have up currently is our monthly balance. You can see how each one of these candles have gotten near the balance high, near the balance low, but hasn't quite taken it out. So we're just chopping inside this range. Once again, this area here that I'm about to highlight was our cost basis for the move to the upside. This area right in here was our cost basis for the move to the upside. We had people take profits, we roll over, and we get back into that cost basis. We bounce a little bit, and then we have some more sell pressure come into the market. But we are in a 3-week balance, as we had an outside week, outside week down 2 weeks ago. Last week, we took out the previous week's low, was attempting to 1 time frame down, I called it down to balance, and then we take out last week's high this week, pushed near the balance high, and didn't really get above it. So closing out the week in a 3-week balance. Let me make sure I have that marked. Yep, right there. You can see how I have it marked on my chart. 3-week balance. You balance high of 40, 82, 25. Balance low of 38, 40, 75. Pretty decent range either way, right? One thing to note is this downward trend from last year. What are we doing? We're kind of holding above it for right now. However, in the midst of it, we've been creating our own little lower high, lower low trend line here, right? We've been kind of keeping a slight trend. Now, is this a bull flag that we're setting up on the weekly? And once we come out of this to the upside, we should have a pretty good move. However, if this fails and we come back in, the move to the downside will also be greater, in my opinion, or exaggerated. Now let's look at our daily. We go in our daily time frame. We are also in a balance or a trading range. Actually, no, we're not. We are one time framing down. Excuse me. We're one time framing down. However, you can see that we're trading inside that weekly balance. And then if I were to go to our daily balance, we had taken out that 2-day balance low, and we are one time framing down 2 days in a row, holding above the 200-day moving average and the 20-day moving average, but below the 50. Now, my theory or my thought process is that because we are in a trading range on the monthly, and we can see that how we're trading inside that here from a daily standpoint, because we're trading and chopping inside this range, and I think these moving averages are going to converge for a little bit longer. We're going to continue to chop in or around those moving averages on the daily and the weekly time frames until we come out of balance, either to the upside or to the downside. And once we do, that should give us a really good indication of how these moving averages are going to benefit us when we get near them again. So keep that in mind. Just chopping around these moving averages, they're really not anything to lean against, as we violate them pretty frequently. I would not hold it too strong as a conviction for a trade or anything, right? We've just been kind of chopping between them here recently. Now, one thing you can kind of see here on the daily is we have a little bit of a reverse head and shoulders, inverse head and shoulders setting up here. So is this an inverse head and shoulder where we'll come back up and then begin to set new highs or a new trend to the upside? Either way, once we do begin to have a more accommodating market, it is going to be tough to trust because of these emotional moves and these emotional trades that we've had over the past 2 years. So once again, daily, one time framing down, 2 days in a row now. All that means is we're taking out previous day's lows. So we look to continue that coming into Monday. We take it out. We could take out today's low. We could push lower. We take out today's high. Then we come into a firm 4-day balance or firm 4-day trading range. But Monday, we'll see what happens. So with that being said, ladies and gentlemen, thanks for stopping by. We'll catch you guys in the next one. See you.